In today's video, we're talking about a boomer stock. That's right, Verizon Wireless, and while it may not be that hot new growth stock that talks about teleportation, it is a massive company that generates a ton of cash flow, and it's riding the coattails of the growth in the 5G market. So in this video, we're going to talk about the 5G market, kind of the opportunity there, and how Verizon can capture some of that upside. And then I'll talk about why I think Verizon also has some decent upside, even though it's already a huge company and considered more of a slow grower. First of all, what's the buzz around 5G? Because I've been hearing about this thing for a while now personally, and Qualcomm has a pretty nice little article that sums up everything. You know, we went from 1G to 2G, 3G, add another G, we're at 5G. What it boils down to is it's more reliable, it's faster, and it's more efficient than the old tech. And what's really interesting is that with this new technology, the promise is that it will unlock new user experiences as well as new industries. Use cases can include real-time shipping, smart logistics, autonomous driving, you name it. Basically anything that needs a faster connection that's reliable and at a cheaper rate, 5G is the answer. Just think about how much we use this thing, right? We use our phones so much in our daily lives. Think about the capabilities that we would unlock if our connection was always solid, if it was faster, if you could utilize talking to other devices all the time. And the most important thing is that it's kind of available to everyone, right? So companies that are investing in 5G are unlocking the future economy for a lot of industries. So Internet of Things or virtual reality. It's all capable because of 5G. And the reason investors should care about it is because of the explosive growth in this market. We're talking about a 46.2% compounded annual growth rate for the 5G market. That's pretty darn fast. One of the companies that are going all in on 5G and investing heavily is Verizon. In the first quarter results, they talk about how they're expanding the 5G capabilities as well as spending a ton of money in CapEx in order to build it out. Along with that report, they gave guidance saying over the next 3 years, they would spend around another $10 billion in CapEx related to 5G. They also recently sold a 90% stake in their media and advertising business to raise cash. They were a top bidder in a recent government auction of mid-band radio. They are really going all in on 5G, and they expect it to be a growth engine because they call out for 2% growth in 2021, as well as 3% in 2022 and 23, as well as an upwards of 4% of 2024. So they're going all in on 5G because they also see it as a growth engine and a way for their business to transform for the future. Well, that's all nice and dandy. That's a great story. They're investing in 5G, but how do the financials look versus the current market cap, and where do I see the opportunity here? When you look at the stock, you can see what I meant when I said a slow grower. Looking at a year, there's not a lot of volatility in the stock as the revenues are pretty consistent, the growth is small, and they offer a decent dividend. So at $58.54, we're talking about a market cap of $242 billion. If you look at the cash flow statement for something like 2020, the free cash flow was around $21 billion and the total cash paid out for dividends was around $10 billion. So they're around 50% covered there. The reason that you're seeing a huge negative cash flow for the trailing 12 months is this minus $46 billion for net intangibles purchased. So that's not something that's going to continually happen every year, so it's kind of a one-off. That's kind of why you're seeing this weird number here. But realistically, Verizon has a ton of free cash flow from the business itself to sustain a dividend as well as investing back in the business with CapEx. One concern investors have is this total debt number continuing to grow. You can see it went from 137 billion to currently at 179 billion at the end of last quarter. Now, for me, if the reason for the debt is to grow the business, it's not as bad as, let's say, the debt is being used to just fuel dividends or basically keep afloat. This is a little different for Verizon because they're taking out this debt to invest in the business and grow in the future. So the stock obviously offers some stability, but I think there's upside because I don't think the full potential or that revenue growth is on a lot of people's minds when it comes to investing in something like Verizon. They see a huge debt load, but they also have an insane amount of free cash flow. They're investing in the business and they're thinking long term right now. So they're building up that debt a little bit to invest in 5G. And so as long as their cash flow continues to come in like it has, They can easily pay the debt down. They can also pay out the dividends, and they can invest back in the business. Here's a look at the discounted cash flow that I did for the actual company. In 2021, I essentially went with their guidance and tried to make it so their earnings came out to around $5 earnings per share. And then I factored in the revenue growth rates that we talked about a little earlier, with a little pay down in debt, keeping the same percentage for interest rates, as well as kind of keeping the tax rate similar to this previous year. Looking at CapEx and depreciation and amortization, I'm just using a percentage of revenue. And what I come out with is an intrinsic value of $71.48, which would represent a 21% upside from the current value of $58.75 as of when I did this model. For me personally, I use pretty conservative estimates when it came to revenue growth. You can see 2-3%, not that much. The operating margin percentage I pretty much kept it the same as they have been operating in the past, so not any efficiency improvements over the next couple of years. I had an assumption where they're paying down the debt a little bit. You can see $6 billion a year, and that would be coming from their free cash flow. The capital expenditures I raised a little bit due to the 5G investments over the next 5 years. So all those conservative estimates with a discount rate of around 6.7%. We're talking about a 21% upside for a company that I don't see a ton of doom and gloom, right? So I don't see the company crashing 40%. This is obviously a slow grower, and there's kind of a floor for the stock because one, it offers that dividend, and then it also has that cash flow to back it up. So I'm less worried about Verizon losing 50% of its value versus something that maybe is a growth stock and there's no profits or cash flow to really create a floor for the stock. The whole story really comes down to whether or not you believe 5G is the future, and Verizon's obviously going all in on it. I think the hope is once it's common ground where everyone wants 5G and companies need 5G, Verizon will be the one company that invested heavily, and so they'll benefit from that. Hope you guys enjoyed this video. If you did, give it a thumbs up and consider subscribing to Main Street Wolf, where I talk about stocks, investing, options, all that fun stuff about money. Thanks guys for watching, and have a great day.